Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So really exciting here. Came right down, touched the 200-day moving average, bounced up. It is up 1.9% for the week. So this bump kind of surprised me. I thought we might be moving down here on the S&P 500. Did not. I still think it's going to go lower. We do have, this is quite a bit of support right underneath it right here. It's still around 57.75, somewhere in that ballpark, 57.80. I'm sorry. Yeah, 57.75, 57.80. This bar makes it look like it wants to go higher, but you also have a lot of support right underneath it here, but we've made a lower high. The technicals down here are rolling over on the MACD and the RSI. We do have increasing volume right here, but the price is going down. So I would say probably not quite 60%, we'll call it 57.5% of the time the S&P goes down here and the rest it goes up. So my bias is down next week for the S&P 500. Dow Jones Industrial Average is up 1.6% for the week, so still can't break through that 200-day moving average. As long as it cannot, then it's going down, although this 20 seems to be supporting it quite a bit, but the technicals have started to roll over a bit. My money is on it going down. And the NASDAQ, we're bringing this one up. Jonathan says, do you see a potential head and shoulder pattern on the NASDAQ? Left shoulder is from April to July. So basically he's saying from here to July. So a head and shoulder pattern. Let me draw this here. So here's the left shoulder. And then the head is from July to February 2025. So from here, and then this is February up here. I think what you meant is it continuing to go down here to April. If you did mean the head go up here, then no, that's not. If it goes down here, no, not really. Right. Okay. So basically the way we want to look at these is for a head and shoulder pattern, it's going to be a reversal pattern, right? So it needs to be, stock price needs to be moving up, which it is. So it's in a pattern going like that. Then basically we form a pattern that looks something like this: left shoulder, and then head, and then right shoulder. And when you get that pattern formed, then it breaks down to the downside. Now we need the formation to happen on either an upslope like that or flatlined like this, but it cannot go down. That means the pattern would be negated. And then it's basically the exact opposite for an inverse head and shoulder. So I don't see one here, Jonathan. Good question though, good for looking out. There's a really good example of one coming up, and that will be on gold divided by uranium. So stay tuned and watch that one. Dow Jones divided by gold is, Dow Jones outperformed gold by 3.2%. Still got to break this downward channel trend line right here, and then gold will be off to the races compared to the Dow. And the dollar is up 0.3% for the week. Kind of same thing as last week. Lower is more likely than higher. We basically have support right here, which would create a quick little double bottom right there, right around, we'll just even numbers here, we'll call it 98. And then after that, there's really not much support on it until the low 90s. So it could get pretty exciting here. Not super exciting if you're an American saving your currency in dollars, but really exciting if you're a trader and a commodity investor. The 10-year yield is down 2.5% for the week. So had the retrace that I expected. Now we're going to want to watch the 618 level. So ultimately yields should move higher, but I'll just draw this for you here using our special little tool, the Fibonacci retracement. So look at this. So this is orange is 38.2, 50% retracement, 618. Okay. almost a perfect double bottom right here on the 10-year yield, almost coming down to the 50% mark. I like the 618 personally. I just feel like that one hits the most. But we'll see. Might get a little bounce here in yields. Ultimately, I think this one's going 5% and north of that, which is horrible for the American housing market. But time will tell. We'll see. We'll see. My money on next week, though, is that we get a little bounce here. Nice little double bottom. And no, actually, I'll take that back. Okay. Banana to my head. I think it's going down next week. All right, we'll see what actually happens. Okay, the 10-year yield minus the 2-year yield. The 10-year underperformed the 2-year by 3.5%. Still leveling out up towards the top of this parallel channel right here. So as yields come out and start to pay more for long duration debt than short duration debt, we should be entering into the recession right now. And I think history will prove so. 1-month Treasury is still paying 4.29%. Okay, so I went back over these, and we did have some weekly closes. I think one weekly close at 4.29. Looking at the CME tool, the Fed has their next meeting in 18 days, 19 days when you guys will be watching this. I'm recording this on Saturday afternoon. And they don't have the Fed cutting until their September meeting. So that's when most traders think that the Fed will cut by. We'll see. We'll see. That thing could change on a dime. LQD puts, still like to get a little more. We're getting a little stretched here. I'm really hoping this comes up to the 200-day moving average. Then I'll be able to run a put pretty confidently on this one. But yeah, I'd love to see this continue up next week, and then I can grab some more. And the US dollar divided by the Canadian dollar. So it looks like we got a little downward channel trend line established right here. Pretty good level of support for this ratio on the 136 level. So 1.36 Canadian dollars for one US dollar. So for our Canadian friends, we're going to want to watch this level right here, and that should tell you whether you want to store it in USD or Canadian, your cash. And the Japanese yen fell out of the sky. So we're up at almost 3.7% last week, and just fell. This is yields on the 40-year government bonds in Japan. Fell out of the sky, came down to 3.1. So this is pretty interesting. Basically, when you see this chart go down, that means a whole bunch of people are buying these 40-year government bonds. So it went from almost 4% down to almost 3%. Quite a pretty violent move there for a bond. It's interesting to. I'd be curious to get. Maybe we can get a bond expert on the show and pick their brain. If you have any suggestions for who that could be, put them down in the comments below. And gold is down 1.5% for the week. So this is looking pretty exciting here. Middle of the road technicals on RSI and MACD. A little bit of decreasing volume here, but what's really caught my eye here is this downward channel trend line. I think as more time goes on, I think it is more likely that we're going to get kind of some sideways consolidation, slightly down, basically kind of up and down until we hit this rising 200-day moving average, and then we are off to the races. Next week's guests, we have Alan Hibbard and Garrett Goggins. So make sure you get your questions in. Go to the community tab, the post tab on the YouTube channel, or sign up for our free newsletter, and there'll be links in there. Alan works with Mike Maloney on his gold silver channel. Alan is an expert in precious metals and Bitcoin. And Garrett, we've had him on the show twice, so this will round it out to a nice even 3 times. Garrett likes to find little precious metal junior companies with massive upside potential. So submit your questions under the post tab. I will also be over at the Rule Classroom this week doing another chart session. So if that interests you, follow the links down below. Go to the Rule Classroom, and I'll see you there this Wednesday at 12:30 p.m. Pacific time, taking your live company questions and pulling them up on the charts. And gold divided by the S&P 500, gold underperformed the S&P 500 by 3.3%, as long as we're above this 50% mark, meaning that it takes 2 gold coins to buy 1 share of the S&P 500. I think we're doing very, very well. What's interesting here is although gold and silver were down this week, the miners were not, generally speaking, which is interesting. I don't know that I would read too much into it, but that is it is good for the good for us as commodity investors that are betting on these miners that the gold and silver commodity itself could consolidate and the miners continue to go up. That means there's still a lot of room there. All right, and CEF, physical gold and silver on the stock market. So if you're new to the show, this is where you start. Down 1.8%. So I like first entry points here at 28. I think you will get another chance at that. And PHYS is down 2%. I moved this line up, this red line, I moved it up another 25 cents. It was at 24. I moved it up to 24 and a quarter. I think that's a lot more likely to hit. If you're really impatient, you could try to catch it on this 50-day moving average, but I think it'll get down there. So I would be patient. And GDX up 0.2% for the week. So here's where the miners start to outperform. GDX up 0.2% for the week. I raised the red line by $1. This was down at 45, raised it up to 46. I was saying the last couple of weeks I felt pretty confident that 41.50 would get hit. I'm not quite so confident anymore. I don't know that it will. I feel fairly confident that we'll see 46. Maybe 70% of the time we hit 46, but this 41, I'm not feeling quite as confident anymore. We'll see how this irons out. GDXJ also up 1%. I did not raise this one by $1. Liked where that line was. Yeah, these are just outperforming the metal. So we're finally starting to see performance in the miners compared to the metal, which is awesome. And Franco Nevada is up 0.6% for the week. Watch for the retracement. So here we have a Fibonacci right in here. Okay, 38, 50, and 618. And it's not a coincidence that we drew our red line right here on the 618 level, which is basically $155. That would work out perfectly if it came down here for a double bottom and then just off to the races. But we'll see. That would be my first entry point right there at 155. And Gold Royalty Corporation is up 0.5% for the week. So getting pretty stretched. Found a parallel channel here that isn't perfect. But, you know, this is a pretty small market cap company. What's it up to now, actually, since we've had this run? Ooh, we're over 300 million. Nice. Haven't seen that in a while. Getting a little stretched here. If you're a trader and you got down here and down here like we did, you're up quite a bit. You know, might be time to take a little profits. But now what's going to happen is this upward channel will act as a little level of support. Okay, so we've got 1, 2, 3 touches right there on the upper side, upper rail of that channel. We'll see if this upper channel holds. My bet is it's probably going to bounce through and come back down. But we do have an established uptrend here, so that is encouraging for GROY. And Origin Royalties is up 0.1% for the week. So, I'll be getting more of this and triple flag when the deal goes through. So remember, going back, longtime listeners will remember when we were talking to Rick about this one, and this thing was just going sideways and going nowhere. And basically anything below 50 cents was a good deal. So, you know, we're just putting limit orders in here for 45 cents, 46, 49, 49, right? Just picking anything below 50 cents, right? And then it came to a point where we thought it got a little expensive, so we took some profits. And then pretty much we found out anything below $1 at that point was a good deal. So we just started buying more when it was around $1, right? Now here we are at $1.33, or we close, yeah, $1.33. Okay, this is the new level, okay? Anything below $1.30 is a good deal. So we're gonna lower this down here to $1.30. And let's make it a yellow line. Okay, so anything below $1.30 is now a good deal. We're probably not ever going to see $1 again. So this is our new level. So if you set a limit order in here for $1.30, that should pay off quite well. And hopefully a year from now, we'll be saying anything below $2 is a good deal. All right, so that's your level 130 for Origin Royalties. And Barrick Gold is up 0.5% for the week. So we want to watch the 200-day moving average on this. Keep your eye on that. It hasn't been totally obeyed by this stock. Let me take a look at the weekly here, see what we got. Yeah, okay, so we got the 200 weekly rate here coming in. Yeah, I still like that 1775 limit order for a first order and then 1625 for a second. I probably need to move these up just a little bit. And Newmont is down 1.7% for the week. So I'd love to see this come back down and correct down here to, I moved this one up a little bit to 48.50 for the first level. And maybe you guys can already see it. I'll give you 1 second. What am I going to draw here? Oh, yeah, your favorite tool of mine, Fibonacci retracement. There it is, right there on the 618. Now, if I could write history, what I would have this stock do is I would have this come up and back down for a double bottom right as the 200 moving average is catching it. This is what I call my favorite bet, is when you have the 618 retracement on a rising 200-day moving average. And yeah, that's what dreams are made of, boys and girls. Right there, that's how you print money. All right, Agnico Eagle is up 0.3% for the week. Just did the red, yellow, and green lines. Okay, so now we're at 105. I think we were at 190 and 80 last week, or maybe it was 78 and then 80. I can't remember. Anyways, these are the new levels. 105, 95, and 85 for the green line. I like those levels a lot. You can probably already see it right in there. And let's see, IR says, hi, Steve. Instead of saying running an option, could you say buy, sell, a put, or a call? It is the same number of words, but it gives the actual information, and we don't need to guess. Thanks for all the great work you're doing. Yes, I could do that. That would be a lot more descriptive than just saying running an option. Okay, so like this one, on B2 Gold, it's up 0.9% for the week. So instead of running an option, what I did was I bought a call. Okay, so I was basically betting that this was going to go up, which it did. Now the expiration is, well over a year away. It's not till January 2027. So if this was a shorter dated one, like if this was only a month or two out, I'd be out of this thing already and probably up 100%. But since it's so long dated, the stock's up 15%. I think I'm up 30% in the option, so about double. So that's what I like about options a lot is if you're pretty certain on a move, you can make a lot of money from those things. And you can see my favorite setup right here. Boom, 618 rising 200-day moving average, like clockwork, right? Okay, and let's see. Equinox Gold is down 1.3% for the week. Interesting setup. I just see this right now. Let me see if this is actually valid. Not really. Okay, so setup right here on the 200-day moving average. That's when I got into it. And I was looking to see if this was a bull flag or not. So basically we're looking at this and then that and that. Maybe a little baby one, but I don't like the histogram down here for a bull flag. I'd rather see like red like we got here, and then a little bit more like if this comes down and starts to like put in some red histogram, then I would become a little bit more interested in maybe even running like an option on this one. Okay, running an option, buying a call. All right, G Mining Ventures is up 0.3% for the week. So hit the red line week before last. You guys got in at $13. Congratulations. I would still have a limit order right there at $13. I like that for an entry point. Your stink bid's going to be $9.50 and your 50% mark here is going to be $11. And Rio 2 up 8.4% for the week. So absolutely fantastic. I need to get Alex back on the show. They're doing a lot of stuff over there, building out this mine. This is playing out perfectly, as it's only taken 5 years to do so after being invested in this thing. Chinchillas get out the way. But yeah, this is my highest conviction junior right now. I can't bring myself to buy anymore because this is already probably too much of my portfolio. But looking fantastic, right in the Lobo Tigre pre-production sweet spot, looking great in a bull market in gold. And silver is down 1.7% for the week. So coming up like now on key support right here at the 20 and the 50-day moving average. Let me take a look at the weekly here real quick. Yeah, right on the 20 weekly. Yeah, I mean, this looks pretty good to me. We've got, so basically a kind of a trend line of support right around there. The 50-day moving average, you got the 200-day moving average right now at 31.81. It wasn't that long ago that it was at, south of 30. Middle of the road technicals, but my bias on this is up. I think that silver will do pretty well here. I think we're getting close to it outperforming gold. Okay, here's the gold to silver ratio. So last week it took 100 ounces of silver to get 1 ounce of gold. It still takes 100 ounces of silver to get 1 ounce of gold. But this is interesting here. What we've got ironing out, it looks like a bull pennant. So we start right here, and remember, this is just a ratio chart, okay? So when we get a formation like this, usually it's pretty bullish. That on top of it, you got a rising 50-day moving average right here to catch it. We might have a breakout here to the upside. Now, this is where it could get kind of crazy. I'm going to zoom out here. Where'd my little... Oh, there it is. Good. I was like, man, I took all that time to draw these things, and there it is. All right, so here's some ratios that could happen. If we go way out on the chart, let me go out to the monthly so you guys could see it, and how ridiculous some of these ratios can get. Okay, so recently, and COVID, the ratio got all the way up to like 126 to 1. Okay, so that was 126 ounces of silver to buy 1 ounce of gold. We're up around 100 right now. And historically, when the ratio gets up that high, you usually have a correction, meaning that silver outperforms gold. Well, what if this happened, right? What if gold went back up to 3,500 and silver went down to 28? Then you get a ratio of 125, and that's really not that far out of the woods. Silver's at 33. If it were to drop to 28, I mean, heck, it dropped down to 27 just during Liberation Day, right? Just I don't know, a month and a half ago. That's not out of the woods. Then you get this ratio up to 125. What if gold, which its log target is 4,000, goes to 4,000, and silver goes down to 30? From 33 to 30, that wouldn't be completely unheard of. Then you get a ratio of 133, which would be the biggest ratio ever to happen. But we can all imagine 4,000 gold and $30 silver, right? And what if you start getting crazy here and you go 5,000 gold and silver goes back down to our stink bid line, which I think will happen 15% of the time. It gets down to 2650. Now the ratio is 188. And if gold goes to 6,000 and silver stays around 30, you got a ratio of 200. So just because we're at this extreme ratio here doesn't mean that we can't get even dumber, okay? Doesn't mean that this thing can't go up. I'm betting more on gold than I am on silver right now, so I don't think that will happen. But that's the reverse side of the argument that you need to be aware of, is if you don't have any silver exposure, I think that could be a mistake because, I'm sorry, if you don't have enough gold exposure, I think that could be a mistake because this ratio could get real stupid and gold could way outperform silver. Just a thought. Another way to visually represent this is if I go here, I'm going to put this on a line chart. Okay, so there's silver, and then I'm going to add gold on a new price scale right here, and we'll go out to the monthly so we can see a long time frame. And blue is silver, and yellow is gold, right? So if let me shrink this up just a little bit. So take a look at the gold chart here. Let me scroll this down a little bit. And you can see the parabolic move that gold has had in, just the last year, right? Not even that. Okay, just parabolic. Is it really inconceivable that this couldn't just do that again, right? Now we're up at $4,000 gold. And is it just inconceivable that silver could just do that? Right? If we do that, you get some of those stupid ratios I'm talking about. That's all it would take. Okay? All right. Food for thought. Food for thought. Let's bring all these back in. Then we go back to the bar chart and click that. And then we are off to the races. What am I doing? There we go. Come on. There. I swear I've done this before. PSLV down 1.2% for the week. Let me scroll into the daily here, and no one can tell what that's at. Looks pretty good, right on a retrace here of the 38.2. So it's holding above the 50-day moving average. I would be waiting for this to come back down to this first level right here before I would think about any kind of entry into this thing. And that is at $10.80. But the first level I got right here is $10.50. I might need to bump that up a little bit, actually get it at least above the 200-day moving average, which is at $10.62. And SIL up 1.2% for the week. So again, the miners outperforming the metal, looking great. No buys now, but I would be watching the 50 and the 200-day moving average. 200-day moving average is at 36.67. Got our first limit order there at 36.50. SILJ, same thing, miners performing, metal not, up 1.7% for the week. I would like it to come right in here for what would be a, I don't know, triple bottom right there at $11.75. And Pan American Silver up 1% for the week. Looks like it's going to slightly roll over right here. That you might get a second shot at this one on the 200-day moving average, just like we did a couple weeks ago. Like this one a lot. They're buying Mag Silver. They're going to be one of the biggest silver producers on the planet. I think this is going to be fantastic, and I think this company, the thing about this one is you don't have quite the leverage that you would on something like Argenta Silver or Cerro de Pasco, but it's a lot safer. I can't believe I'm calling the silver stock safe. It's a lot safer than either of those. You know what I mean? These guys are producers. I think they're going to absolutely kill it in the silver bull market. All right, and how can you guys support the show? First and foremost, hit the like button and share this show with anyone that you think needs to hear it. Subscribe if you're not already. And if you're going to use some of the products and services I talk about on the show, like the Rule Classroom or TradingView or anything, there's links down below, and they're all affiliate links. So it doesn't cost you any extra. You support me, you support our editors and our families in the process. There's also a donation link down below to PayPal, so you can donate. Another way you can support the show, join the free newsletter. That will support the show. There's lots of links in there that give back to the cause, and it's not going to be free forever, so you get to try it out in the meantime. And when the technical analysis series come out, buy it. It's a way for you to support, and we are grateful. So when you go to the website, let me share my screen here. There will be a pop-up. Oh, I'm not sharing my screen. There we go. Share. Boom. There will be a pop-up that comes up right here. Subscribe. Just enter your email right here. It has a double opt-in. And so basically after you put in your email, you got to go to your email and click, yes, this was me. And then you'll start getting the newsletter. You got to get it in before 10 a.m. So if you're watching this live, get your email in right here, stevebartonmoney.com. And you'll start getting the newsletter, which it'll come out at 10 a.m. An hour after Monday market moves start. So super grateful for all you guys that have already signed up. Thank you for doing so. It's a lot of fun. I enjoy this, and I'm grateful that I get to do it. All right, and copper, paging Dr. Copper, down 3.3% for the week. So we want this one to go down more. We want it to approach the 200-day moving average, and especially this upward channel white line right here. Would love another Liberation Day sell-off here. I guess we could wish in one hand and you know what in the other. But I really hope this gets sold off more. I'd like to get some more copper stocks. And gold divided by copper looks like a pretty interesting pattern here. It's kind of forming out a bull flag. So this could get crazy stupid on the ratio here, and that would mean that gold is way outperforming copper. I don't know. This ratio is up 1.9%, so gold outperformed copper by 1.9%. Last week, it was 695 pounds of copper to get 1 ounce of gold, and now it is 709 pounds of copper to get 1 ounce of gold. COP.U. So down 2% for the week. So here's a little arbitrage for you guys in your 20s and 30s that have the patience or the fortitude to do this. Is basically, if you look here, I'm calling this the 14% arbitrage. This is another way to store your wealth, right? You don't have to store it in American dollars. You could store it in physical copper right here. Now, they charge you 2% a year to do it, but it is a way to get some of your currency, regardless of what country you're in, out of that currency and put it into something real like copper, right? But there is a continuing arbitrage that happens here with a pretty massive discount on this thing. I think right now it's like 17%. But you could run a sell order when it hits here, $8, and you could hit as soon as it does sell, then you could buy again, put in a limit order to buy at 7. And look at how often that would have worked so far. So it would have worked back here in March, and then a couple weeks later, you would have sold at the end of March, okay? And then you would have bought again at the beginning of April, and then you would have sold again at the middle of April, and then you would have bought again at the end of April, and then you would have sold again at the middle of May. Okay, and now we're in the middle of the road and we're just waiting for it to hit 7 again, and you can buy and rinse and repeat the whole day, all day long, right? This is kind of like in poker when you get small pocket pairs in the big blind and someone raises in late position. The amateurs call there hoping to hit a set, but the real move is to 3-bet and take the pot down 80 to 85% of the time. That's a move like this. You're not going to make a whole lot of money, but you're going to make money. You know, neat little setup there. Maybe I shouldn't be talking about this on the show because 12 guys could blow up this bet overnight. All right, copper, COPX, down 0.7% for the week. So it broke through the 200-day moving average, fell down, and couldn't close out the deal. Nice little reversal bar to the upside there, but just couldn't quite close it out. Hopefully we'll get a sell-off in poker. And copper here, come back down to the $36 mark for COPX. I like that a lot, but technicals are way too high here to buy anything. You got RSI at 60. Not interested. Last week we interviewed Peter Granich. He is super bullish on copper. Check out that episode in the archives. Antonio must have been listening at work because he even wrote in the comments, he said, I made the crew turn off Cannibal Corpse, which is a band, and listen to this. Thank you for the great interview. Well, thank you too, Antonio. That's how we spread the word and get it out to people, and you support the show. Thank you. Also interviewed John Williams of Shadow Stats. That interview will be out soon. And my apologies to Berlin and Matt. You guys submitted questions, and I just completely forgot to ask John. So sorry about that, guys. My fault. All right, COPJ is down 0.7% for the week. Broke through the 200-day moving average last week, and it stayed above. We are coming up on some serious resistance right here. So we got kind of a double top forming right now. My bias would be down for next week as opposed to up on COPJ. Freeport is down 1.4% for the week. So for the regulars, your limit order hit. For the new guys, basically your first limit order right here will be $34, and then after that, $27.75. Monduro Capital, they're going to be out at the Rule Symposium. Cannot wait for that. Down 2.1% for the week. So seems to be putting in kind of a floor right here at my loosely drawn 13.3 cent line. It's probably staying there because I drew this white line and for no other reason than that. We'll see if it holds. But I think any approaches to that white line, if you want into a very, very leveraged copper play, this would be it. And uranium is up 0.2% for the week. So Peter and I talked about uranium quite a bit last week in his interview. Had a nice little pullback this week. The uranium equities, not the spot price here. You can't even tell it did anything. But the uranium equities had a nice little pullback. So I put a hedge on instead of selling more. Gold divided by U308. Okay, so Jonathan, this is a good example here of a head and shoulder pattern. Now, whether it plays out or not, this is the pattern that you're looking for. So let me draw it here. Oh, that's not text. There we go. Okay, so you got left shoulder, head, right shoulder, boom, right? It's in an upward trend. So this would be a reversal pattern. Well, that was a terrible arrow. Okay, it's in an upward trend. Try it again. That's an arrow. Upward trend. So this will be a reversal pattern. So it would break to the downside. This would reverse the pattern, right? And the neckline is in a slightly upward sloping neckline, which is good, or it could be completely flat, which would be good if the neckline was angling down, you know, like you had a downward angle like that and like that and like that. No, that's not a head and shoulder pattern. Okay, so this is what a head and shoulder pattern looks like, and we can measure the target by going from the top of the head to the neckline, and then we just simply drag this down to get a target, and it looks like it could fall here to a ratio of, we'll round up here and say 40. Okay, right now it's at 46. So might be a false breakout right here because it's coming back up to the line, but this chart is basically saying that it looks like uranium is going to outperform gold. So as this goes down, uranium does good, gold doesn't. All right. And what do we got here? SRUUF down 4.1% for the week. So came up to the, broke out of this parallel channel right here, which was pretty significant, but hit the 200-day moving average and got rejected and fell below that. So still have a slight discount, a slight 7.8%, nowhere near what we want to do when we're buying this thing, but looks like it might be reversing down, which is nice. Maybe we can get some more. Never quite went to a premium yet, but I mean, if you look at all these entry points right here, we're in the black. You know, you could take profits if you want, but I would prefer to wait until spot moves to a premium, which it inevitably will, and then you can get even more money. Patrick says, I put a significant position back into SPUT 2 weeks ago, and he wrote this at the beginning of the week, so 3 weeks ago, right around here. Good on you. Good on you. I am 31 years old and been following uranium since 2017. Kind of painful, and I didn't have a lot of money to invest back then. Most stocks are up a lot, but I made some money, and now I'm back again. Thanks for your videos. You're welcome. I love hearing that. Love hearing your guys' success stories on making money. Any way I can contribute to that, I feel honored to do so. Cameco down 0.3% for the week, so it came right up, hit the resistance line, and that wasn't super scientific, just lining up with that previous high right there. Got rejected, came back down. Looks like I'm not the only trader that saw that. And the comment of the week from Fred. Fred says, take profits. A nuclear reactor takes 10 years to build. Well said, sir. That created a flurry of comments in the Monday Market Moves episode, and from both sides. But, you know, I'm kind of with you, Fred. I think that, you know, when you have these monster run-ups like this on news, what's the thing? Buy the rumor, sell the news. We had the news come out, and there you go. So I didn't sell more, but what I did was I took a hedge on it, which I'll show you here in just a sec. All right, URNM down 2.2% for the week, so hit the 200-day moving average, fell below it. I was pretty optimistic last week because it closed above it, just couldn't hold it. URNJ, same thing, just shot up, hit the 200-day moving average, came right back down. Not a coincidence that it hit the 200-day moving average and rolled down. Everyone was watching the screen. It was a very small market, and everyone saw the 200-day moving average, and they sold. That one's down 3% for the week. UROI down 5.2% for the week, so shot through the 200-day moving average and then just came right back over. I was thinking about taking profits here and thought, nah, I'm going to be in this one for the eventual run up. And UEC, this is the one I wish I would have bought a put on, but I did not. This one's down 8.1% for the week, so same story. Shot through the 200-day moving average, stood there about a day or two, and then came right back down. This is what I ended up running. URA down 1.6% for the week. So I bought a put as a hedge. Here's the expiration and the strike price. And basically what I was hoping for is that it just quickly, I think this gap is going to fill. I think that it's going to come back down, probably settle around the 200-day moving average. Now that I'm looking at this, I wish I would have gone a little further out and paid a little more, maybe another month or two, because I'm going to have to get rid of this thing quick. It expires in 3 weeks. And ideally, I need to sell this thing next week. I'm hoping uranium just washes out. I'm hoping it goes down as fast as it went up and just comes right back down. Then I'll have the cash that I made from this put to put back right into the same stocks, right? So instead of selling and then buying more shares again, I just ran I bought a put on URA, and I'm hoping for a correction. So we shall see. If you want more ideas like this, check out our free newsletter. As the name would suggest, it is free, and you just go to the website and sign up like I showed you earlier. No spam, none of that. It's just one email once a week, just you and me. Alrighty, and crude oil is down 1.2% for the week. So this is interesting, forming up what looks like it could be a little bit of a bull flag here, although I'll believe it when I see it. Down 1.2% for the week, and Brent is down 2.1% for the week. Interesting that Brent, the gap down right there. Gold divided by crude oil. Last week it was 55 barrels of oil to buy 1 ounce of gold. Now it is 54.5 barrels of oil to buy 1 ounce of gold. So oil outperformed oil by about 0.3%. And XLE. Okay, so we drew this red line last week, I think, or the week before. So for anyone that wants to get into a oil ETF, I like this one a lot. Biggest positions are Exxon and Chevron, the two greatest oil companies on the planet. And yeah, I like it right around this red line right here. If I go to the weekly here, you can see that that lines up perfectly with the 200 weekly moving average, which should show a lot of support. If oil goes down, this line isn't going to mean squat. So your next limit order would be 79.25, and then after that, $75. And James says, a new person watching this video might have multiple questions and misgivings while hearing the glee with which you report price drops. Yeah, I suppose so. I'm really hoping uranium tanks, even though I've got like 15% of my portfolio in it. Yeah, nothing is worse to me than a chart that goes sideways. I would love to see it just drop out of the sky like a waterfall or take off like a rocket ship, because that's where you make your money. You can bet on it going both ways, you know, and it doesn't really matter to me which way it goes. I just want to make money for it. And like going back to this, okay, so here's crude oil, right? Let me go back to this moment right here, okay? Oil went negative. That was probably one of the funnest days of my life. My buddy called me up during COVID. This was the COVID crash. During the cerveza sickness, my buddy called me up and he said, because we were trying to figure out what to buy, where's the bottom, what do we do? And he called me up and he said, I found it. And I was like, what'd you find? And he's all, it's oil. I said, oil? And he's like, yeah, that's the bet. That's what we get in. Because we went to cash. As soon as the market rolled over, we're just, almost 100% cash and just waiting for something, And I was like, he's like, yeah, oil went negative $30 a barrel. And I'm like, well, that doesn't make any sense. How is that possible? And he said, well, the trucks keep coming and they have nowhere to store this thing. So they're actually charging these rail companies and these companies to store the oil for them because they don't have anywhere to put it. I'm like, well, that's not sustainable. So either we just stop driving cars and airline travel is over, or this reverts. And the fact that it dropped down so much, this was the trade of my life. This was life-changing money for me. And I remember we were glued in front of the screen from 7 in the morning until 1 o'clock when the market closed. We had deployed almost all of our cash, and it was all in oil companies. And, so yeah, nothing gets me more excited than a chart that just goes parabolic up or one that goes parabolic down, because that means that you're about to make a lot of money. All right. Thank you, James. That's clarity for the new guys. Yes, if you hear me get excited seeing a chart go down, that's probably why I'm reliving my glory days on negative oil. All right, and let's see, what do we got? ERY. Okay, so this is basically an inverse bet on oil. If you think oil is going to go down, then you can bet on this, and this goes up generally double per day. So I haven't had I missed this little bet right here. I think it's 7 or 8% up, but I didn't really see a setup where I could bet it. XOM down 0.7% for the week. Now is good. I bought last week or week before last. When was it? May 22nd. I got it at 103.15. Now it's 102.30, even better. I saw intraday it got down into the 101s. Now it's fine. Then limit order at 100, and then again after that at 96. And Chevron, same story, up 0.1%. I like this now. I think now is a good time to buy. It might even get cheaper. Kind of looks like a bear flag right here, so you might get an opportunity to get this even cheaper. And basically, as this goes down, the deal got better. Canadian Natural Resources down 2.2% for the week, so still in a downtrend here. Can't break that 200-day moving average. I think it gets cheaper. First limit order at $27.25, then $25. Stink bid at $23. Blackstone Minerals down 1% for the week. So this chart is at risk of breaking down here. Broke through the 618. Dividends getting better. I'm a little concerned with their poor earnings. As the price of oil has gone down, so is their earnings. Let me run, where's the 786? Probably just below it. Yeah. Okay. So that'll be the next level right here, will be $13.22 to see if it hits the 78.6 level. But once we get past the 618, I kind of become uninterested until it goes all the way back to 100% retracement. So I'd be looking down here around $13 or in the high 12s. And Riddle says, U.S. oil, is it forming an inverse head and shoulder? Okay, so let's take a look here. Now, you didn't give any days, so I'm going to assume, and we know that assuming makes an A out of you and me, but I think you're talking about like that, and now we're forming up the right. Okay, so a couple things here. If it's an inverse head and shoulders, just the opposite of what we were talking about before, we have the stock price is now going down, and then this would be a reversal pattern showing that either the neckline needs to be angling down or flat, but it cannot be angled up or it would be negated. That would not be an inverse head and shoulders, right? So I think that's what you're talking about. If it's somewhere else around here, put it in the comments of this one, of this episode, Riddle. I would generally say no, and the reason is because of this bar right here. See how this one just shot way down, and this price action, if we go to the low there, 55.14, and the low here on the head is 55.39, so it's even higher. So you want the shoulders to be lower, generally about, textbook would be half the distance. You want it to look a little more like that and like that. Everything else, I think, kind of adds up. But it's that one wick down there, it kind of throws it off. And I went to the 30-minute chart, and it was down there for quite a while. It wasn't like it was a 1 minute, like one guy selling kind of thing. It was just it was kind of extended. So I would say generally not an inverse head and shoulders, but good catch. I go over stuff like this in my new technical analysis series. You guys have been bugging me for over a year to do it. So it's just about done. I've got my favorite 11 indicators and patterns for technical analysis. My goal was to have it out this weekend, but it looks like I couldn't quite pull it off. Still got a couple more videos to go. I will say, though, I like finding patterns, like head and shoulders and inverse head and shoulders, but they didn't make the top 11 list. There's others that I like more, and I think they're even more reliable. Little teaser for you there. All right, natural gas is up 3.4% for the week. So hit on the 200-day moving average, bounced up, probably going down. Next level resistance is basically the 50 moving average at $3.53, and support is at $3.24 on the 200-day moving average. Technicals are on the middle of the road. Probably, I see it doing this next week. I see it doing that. Like a little smiley face. Devon Energy down 2.9% for the week. So went, let's see, down 2.9% for the week. I like right here, limit order at 30. Well, I think I got it at $30 just to round it. Yeah, but now is fine. $30. Basically, that would come in for like a triple bottom right there. Kind of forming a little bit of a triangle pattern here. So usually when it does that, it'll break one way or the other. So I would have two limit orders set, one at 30 and then another one at 27.50. But just know that now is fundamentally a deal. Birchcliff Energy down to 1.9% for the week. So came right back up, same level as before. No no surprise that it hit resistance there because that's where it hit before. So just do that. There you go. You see that horizontal line. I'd be looking for a first entry point down here around the 200-day moving average. I have this at $4. Probably need to bring it up to like 415, but anywhere in that range. And Paydo, same kind of deal, down 1.9% for the week. Nope, sorry, down 1.4% for the week. And had a nice little shoot up here. And kind of a triangle pattern. We'll see which way this irons out. I need to put in a red line here for Birchcliff. So let's put it at right there. Let's do $12 is your red line if you want into some Canadian natural gas, and we will do it at $12 easy, even to make it easy to remember. And coal, thermal coal is down 2.7% for the week. Met coal is down 1.3% for the week. And our favorite coal ETF, appropriately named COAL, is down 4% for the week. I just talked with Matt Warder, and he said they're going to be offering options on this thing, which is shocking to me because there's only 15.2 million in assets under management and 890,000 shares, which doesn't seem like enough for me to run options. But anyways, that's what he said. I need to reschedule him, and we'll get him back on the show. Coal is hated right now, and I think that means we should be buying it. Looks like it's kind of putting in a little bit of a floor here, catching right around that 50-day moving average, so that's good. Glencore is up 4% for the week, so it got through convincingly on that 50-day moving average right here. It's getting stretched in the RSI. There's no buys right now, but good to see that it shot up. Your buys were back here on Liberation Day. This is not a golden cross, but it's a bullish sign when you see any lower moving average crossing above a higher moving average is good. And so I see this going up. AMR still looks like it's trying to grind out a bottom right here around $112, down 3.4% for the week. Looks like it's putting it in a bottoming pattern. And BTU getting caught by that 50-day moving average isn't a terrible pattern. Not one that I'm ready to bet yet, but having a lot of thermal coal, I think it's going to be a good thing going forward. So take that for what it's worth. Platinum finally had a little retracement here, down 3.1% for the week. So it went up. Unfortunately, it looks like that was just some quick China buying, and that was it. We're going to be scheduling someone from the World Platinum Investment Council. They've agreed to come on the show. We'll get them in about a week, and by then it'll probably be down at 900, and I'll be pounding the table again. PPLT down 3.4% for the week. Still like the starter position around $85, and then 83, and then 80. And Palladium is down 4.2% for the week, $900, still looks good. PALL, that's how you buy physical palladium on the stock market, down 2.7% for the week. Still like a starter position at 85, then 83, then 80. I don't know why I didn't put the red line in there. Nope, alternate J. Oops, that was the wrong button. Undo, that's my favorite button right there. Alternate H, red line at 85. SPPP, you know me, down 1.9% for the week, so still like it at $9, then 875. I got a lot of feedback on the PFIX. There's not too much I can say on the show about them on the air, but I would just say, look at those links in the newsletter last week and talk to your tax guy, and I think he'll put your mind at ease. All right, and Sibanye Stillwater got some feedback on these ones because they had such a run off of the platinum and palladium news. So this is a platinum miner out of South Africa. Had a nice little, I was in this thing for a hot minute, and then I just got scared by the by South Africa power grid and political turmoil. And so I got out for, I think it was a 7% profit, and looks like a good decision as of now. Yeah, it shot up, and it's going to do that if platinum and palladium take off. So if that's the case, this thing is going to do pretty well, but I just didn't want to, it's super, super risky. Here's another one, Impala Holdings. Their ticker is India, Mike, Papa, Uniform Yankee. Okay, and this will have another leveraged bet to platinum and palladium. Ratios, platinum divided by silver, still historically cheap. You can get a 1 platinum coin for a kilo of silver, and you can still get 3 platinum coins for 1 gold coin. Nickel is down 2.5% for the week, so we had a hot minute where it sold down there on Liberation Day, got into the 13,000s. We're still at around that, air quotes, floor at 15,000. NIKL came right up to the 200 like we thought it would, and then got rejected. Bounced right through for a hot minute and then came right back down. Super stretch technicals here, 69 on the RSI. MACD looks like it's starting to roll over, so I would not be a buyer here. I don't think puts are available, but if they were, I think this would be a moment to take one. And Centaurus Metals, this one is up 2% for the week. So it's still kind of on the bottom end of this channel. These guys are going to be out at the Rules Symposium. Hope to see you guys there. There's a link down below. Come join me. I'll be interviewing Darren Gordon again this year, but anywhere down around the bottom part of this channel, I got the stink bid in here at 21 cents American for the over-the-counter. And the Bloomberg shot down, went through this 200-day moving average. I'm kind of glad I didn't see this on Thursday. I probably would have bought more because we got a rising 200-day moving average right there on the 38.2% retracement. Perfect little double bottom with a reversal bar to the upside. But this is one of those that, you know, it was probably 65% to go up, but it didn't do. It didn't do it. It hit the 35% to go down. Right now, it's at the 50% retracement, lining back up with that. But the fact that it's underneath the 200-day moving average, I'm holding off here to get more. Although I think we're going into a commodities bull market, and if that's the case, then the Bloomberg should do well. Iron ore is down 3.8% for the week, so nice little drop here on iron ore. I'd love to see it get back down here to 92. Then we'll get some cheap BHP and Rio Tinto. BHP down 1.8% for the week. Still no buys, no sells either, but looks like it's being caught right here by the 50-day moving average, which is around $48. And Rio Tinto down 3.5% for the week. Where would that be? No, that's not far enough yet. Okay, coming up on a little double bottom as far as support. I mean, the real support I like is $52, but I don't think we'll see that again. Probably closer to like 55, 56, somewhere in that ballpark would be maybe where the red line would go. And our favorite metals and mining ETF, PIC, down 0.3% for the week. Still has to break through that 200 moving average, acting as some serious resistance. Limit orders at 33 and 30, and stink bid down at 28. And Bitcoin down 4.1% for the week. So we hit up there, all-time high at 112,000, and then rolled right over. First level of support for the bulls is going to be right around here, around 102. Okay, is going to be your first level of support right there. If it doesn't hold that, I mean, I guess you got the 50-day moving average and the rising 200 after that, which would be around 95, 96 by the time it got there. We do have a golden cross here. So this blue line moving above the red line is a golden cross. The 50-day moving average moving up. So blue line moving above the yellow. 50-day moving average moving above the 200-day moving average is a golden cross. So that's bullish. However, the technicals here do not look very bullish down here on the RSI and the MACD. They seriously look like they're rolling over. Some fundamental news on this. Scott Bessent was in an interview, and he was talking about how he sees a $2 trillion demand for treasuries coming from the crypto market. So when I got into Bitcoin back at $450, if you guys want to hear the story on that, let me know in the comments below, and I'll tell you next week. But it's kind of long, so I won't do it now. But basically, I think the reason that they're doing this is because, just like Bloomberg told us months ago, is they want demand for treasuries. If more people are buying U.S. debt, they can borrow more money and they can keep kicking this can down the road and keep the game running, right? So if they got $2 trillion coming in for treasuries just because of the crypto market. So remember, when you deposit money on these sites, on Coinbase or Robinhood or whatever, that cash that's being stored there is not cash. It's what they're doing is they're putting it into treasuries and they're getting paid this 4.3% that I pull up every week, right? Well, if there's $2 trillion worth of that, I mean, that's a lot of money that the Donald and his handlers can use and borrow and, keep this game going. So just my thoughts. I am not real interested in Bitcoin. I've got a little bit just in case I'm wrong. So I've got a horse in that race. But the whole reason I got into it was because government didn't like it. It was a way to have digital cash that wasn't traced and taxed. And now it is exactly the opposite of that. Alrighty, well, I hope you guys got something out of that. Thanks for being here. Sign up for the free newsletter and check out the Rule Classroom and the Rule Classroom Plus. You can try out this charting software, TradingView, for free. There is a link down below. Thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.